I'm about to reveal a secret that will transform the way you approach the market. As traders, we're always on a quest to predict where the market is headed next. But what if I told you there's a way to make that quest a whole lot easier? In this video, I'll walk you through a simple yet powerful technique to pinpoint the market's direction. It's not a magic bullet, otherwise we'll all be millionaires, but it's pretty close. So get comfortable, take notes. Let's dive into it. What I'm about to show you is something that I use in my daily trading and it has helped me tremendously. So this is JBP USD and we're gonna use the replay mode to see where the market will head. I have no idea, I did not prepare this before. We're gonna do this together. So basically the idea is whenever we see the market going higher and taking liquidity, as you can see here, this is a form of high resistance area. We can call it high resistance area. While when we head higher, if you can see, this is another place of high resistance area. While when we head higher without taking this liquidity, then it's a place for the market to come back to. And we can target this location or wait for the market to take this liquidity so it can go to another place. How I see the market is on the higher time frame. We are driven by fundamentals. This is where the market wants to go, based on the economy, based on employments, based on so many different things. But on the lower time frame, we are trying to remove all the liquidity before going higher. How are we gonna reach this position? We're gonna reach it by taking all the liquidity, to have all the money, all the orders in order to go higher. So this is what we are trying to target here. This is how we're gonna predict where the market wants to go next. For example, this is the 1 hour and we can see here that we don't have high resistance liquidity. This is all low resistance liquidity. While here, this is high resistance liquidity. So what I would be targeting is this. In general, the market could go higher, but this is not a place where I would want to trade. This is something that could happen, but that does not mean I have to trade it. We are gonna take the easiest and simplest form of trades. And these are the ones that are high probability trades. We're gonna go through the sessions and we're gonna trade it in this session. We're not gonna trade out of sessions. So we're gonna take one example or two examples in New York and two examples in London. So here, New York opens at 8. This is New York open right here. What I see is that right here we have a lot of liquidity. And when we see that the market is going higher like this, they are building this liquidity below it. So that's why we expect the market to go lower. Now, when we do not know what's gonna happen here next, for example, my idea is that the market could take this low and go higher to take this liquidity right here, but we do not know what's happening on the higher time frame, so we can go higher to see if there is any other sort of liquidity that the market could go to. All this here is a form of liquidity that the market could go to. It's more the higher probability is to go lower and take all those than to go higher, because this is going higher. It would take so much more from the market to go higher. Even if it wants to go higher, it should go lower to gather all those orders right here, all this money right here. It will take them, and then if it wants to go higher, it can. If it doesn't want to go higher, it will continue lower. But the most important is taking those first. This is how I see it, and let's see if this is gonna happen. I really do not know, because I have not seen this chart before. I did not prepare this. We're doing it together. So what would the market do? This is during New York. My idea is that it could go up higher till here and then drop lower. And in other forms like ICT, this would be a fair value gap, but I see it in a different way. I see that this is the highest wick and this is where we could react from if we want to go lower. Let's see what's gonna happen. It did not happen during New York. It could happen in another session. So what we did is we did not reach this area, but we are going to remove those three lows. It's number 1, let's see this number 2, and let's see this number 3. As you can see, the market just goes right into it. And usually after we go right into it, we're gonna have to go back and see what we left as liquidity above it. It's always gonna be like that. And for example, we have this right here. So let's go back to 8 New York Open right here. So what do we see? We see that there's a lot of liquidity. We took all the liquidity we want from this area. We took the liquidity from here as well. Okay, but there's more here. And our target would be something like that. And then we will see how would be the reaction. Can we go to the 1 minute time frame? 16 January, I think we can. So, okay, we're not gonna go. So the idea is the market to hold this, and if it holds this, then we could go higher, or it can go hold this. So as you can see on the 15 minutes, where's the area that we can see a reaction from? Here and here. As we can see, market comes to this area right here, and we go higher to reach these low resistance areas, liquidity areas. And as we go down, there's still higher places to take this liquidity, but in order to go higher, this is what we are building right here. So building this, we can see that the market wants to go higher. We could take a trade from here, and this is a high resistance area because we took the liquidity, and we can target this area up. Okay, so right here we have the liquidity going higher. This is how the market is showing you signs, and in these signs you trade with these signs that they're giving. They cannot remove these signs. They are there, you just need to see them and you need to be aware of them. Now this area is still not hit completely, but we just took liquidity from here, and depending on the time, it could be there's times that you can enter the market that are better than the others. We'll talk about that in a different video, but in my opinion, we're gonna go higher to remove this area right there. This is probably some news or not, but we are holding this area. Okay, I'm still bullish that we're gonna hit this area up there. Okay, and this is what the market does. We remove this liquidity, we remove this liquidity, and then we can go back. Now we're gonna go to the higher time frame and see. Basically, when we remove all liquidity, this is it. We stop trading because we don't know where the market is gonna go. Then it's driven by fundamentals. It's driven by different things, and if you know the fundamentals, then you can trade on the higher time frame. You can swing it. You don't need to worry about all this liquidity stuff. But if you want to day trade, then following the liquidity is what you should be doing. I'm gonna give a couple more examples, and we're gonna try a couple more trades to see if they're gonna work out or not. Okay, look at this price action. This is very bad. This is very bad. Should not be trading this. So this is London Open. Let's see what happened. We went above it. We take everything above it. This is a very nice consolidation, and it could be a place where we go higher, take the liquidity above it, and then drop lower. This is how I would see it. This is how it is actually. And in this case, I will take a trade from here with my stop loss below, and I can see that the market wants to go lower, so I can take it. Of course, not gonna be less than 1-to-1, so something like that. And yes, I would definitely take this trade. This is SMD. This is the consolidation. We go higher, manipulate, and go lower. And why did I take it from here? Because this all is a sponsored candle on the higher time frame, you know. So this all is a, let's say, protected area, but this is another form of liquidity above it and below it. This is different than the one I'm teaching you in this video, but it's good to go through it. I'm gonna make part 2 about this. Let me know in the comments if you want part 2 about this. I will be going through more trades of lower resistance liquidity, how to target it. If you want, we can backtest it together, see the results. And if you found value in this video, please subscribe and like the channel. I would appreciate it to help me grow the channel. And I do have another version of this video that you can watch right here.